It is December 20th. The year is almost over. If you are a normal person, a W-2 employee, a wage earner, you are thinking about Christmas gifts. You are thinking about family. But if you are a billionaire, you are thinking about one thing: tax loss harvesting. You see headlines every year. Jeff Bezos pays zero income tax. Elon Musk pays less tax rate than his secretary. You get angry. You scream, tax the rich. But screaming doesn't change the code. Understanding the code changes the game. The tax code is not a law book. It is a treasure map. It is a series of incentives written by the rich for the rich. I'm talking in U.S. terms here. Your country's rules are different, but the pattern is the same. The code favors owners, not earners. Here is the secret they don't teach you in school. Income is the highest taxed thing in the world. If all you ever do is work for money, you lose. The government takes 30, 40, 50% of your labor before it even hits your bank account. You are a partner with the IRS, but they don't do any of the work. The rich do not have income, they have assets, and they play a game called buy, borrow, die. Step 1. Buy. They buy assets, stocks, real estate, businesses. They do not sell them. If you don't sell, you have no capital gains. You pay zero tax. Your stock portfolio goes up by $100 million. Tax bill? Zero. Why? Because it is unrealized. It's phantom wealth on paper. Step 2. Borrow. But wait, how do they eat? How do they buy yachts? They go to the bank. They say, I have $1 billion in Amazon stock. Lend me $50 million cash using the stock as collateral. The bank says, sure, here is $50 million at 4% interest. Here is the magic. Debt is not taxable. If you get a paycheck, it is taxed. If you get a loan, it is tax-free cash. So the billionaire spends the loan. He lives like a king, and he pays 0% tax. Step 3. Die. Eventually, everyone dies. When the billionaire dies, his assets pass to his heirs, and thanks to a beautiful loophole called the step-up in basis, the tax clock resets. The heirs inherit the stock at the current market value. The old gains vanish. The tax liability is wiped clean. The cycle repeats. But today, December 20th, is about a different trick: harvesting losses. Let's say a hedge fund manager made $10 million in profit this year. He owes the IRS $2 million. He hates that. So he looks at his portfolio, he finds positions that are down, stocks, funds, assets sitting at a loss. He sells the losers on December 20th, he realizes the loss. $10 million gain minus $10 million loss equals zero net taxable gain on that bucket. Tax bill on those profits? Basically zero. Then, for stocks and funds, he waits 31 days to avoid the wash sale rule and buys back in. For some asset classes, the rules are different or not yet clearly defined, which is why some people prefer those for tax strategies. He keeps his portfolio exposure, but he erased his tax bill. This is what the smart money is doing right now, this week. They are dumping their losers to offset their winners. This is why the stock market often acts weird in December. It's not economics, it's tax avoidance. You were sitting there paying tax on every dollar you earn, every dollar you spend, and every dollar you save through inflation. You were playing checkers, they are playing four-dimensional chess. So what can you do? You aren't Bezos. First, don't make W-2 your only income stream. Start a business, at least as a side hustle, so some of your income lives in a tax-advantaged world. Business income allows deductions. W-2 income allows almost nothing. Second, don't sell winners. Hold assets forever. Let them compound. If you need cash, you can borrow against them, margin loans, home equity lines. But understand this is an advanced move. If those assets crash and you're over-leveraged, the bank doesn't eat the loss, you do. This is not step one, this is the end game. Third, harvest your losses. If you have stocks or other positions that are down, sell them before year-end. Offset up to $3,000 of your ordinary income or offset your other gains. Don't let a loss go to waste. Use it to starve the beast. Fourth, use tax-advantaged accounts, Roth IRAs, HSAs, 401ks. These are the few bones the government throws you. Maximize them. Peter Thiel put PayPal stock in a Roth IRA and turned it into billions in a tax-free wrapper. Be like Peter. These are strategies, not personal tax advice. Talk to a real CPA who plays offense, not a box ticker who just fills out forms. The game is rigged, I won't lie to you. But you can't win if you don't know the rules. The IRS expects you to be lazy. They expect you to just file the standard deduction and pay up. Don't be the victim, be the architect of your own wealth. Keep what is yours, because if you send it to Washington, they will just use it to bomb a country you can't find on a map, or pay interest to a banker who hates you. I am the architect, and I will see you tomorrow.